Holy smokes. I think I must be blind. NAT is up 5% today, or close to 5%. I must be seeing this wrong. Over the week, it's actually green from November 4th to today. NAT is up almost 11%. Are you kidding me? What is going on with the markets? Well, let's see. What? Tesla down, Slack down, tech is down? That's surprising. Oh, look at this. CIBC, Canadian Imperial Bank of Commerce, is up. Banks are up. NAT up. Nordstrom up. This stock has been beaten down. Berkshire Hathaway is up. Walgreens, all these value plays are up. What's going on? Maxar, a stock that fell by like 25%, up 10% today. What is going on? So in this video, we're going to be talking about the current state of the market in relation to NAT and oil tankers. And if you did like the intro, please be sure to give it a thumbs up and subscribe if you haven't already to my channel. And let's get right into it. Of course, the main reason why I think NAT is up is, of course, the whole market in general is up, especially beaten down value plays like NAT. And NAT is actually considered a value play at the moment because of its crazy low PE ratio. It's not 21.2. That must be wrong. If you go on Yahoo Finance, they'll give you a better PE ratio. It must be like under 6. Anyways, pretty much there's a vaccine that's coming into play, right? And it's actually promising. It said it was effective in 90% of patients, or even over 90% of patients. So that's the first news. Next news, we have more certainty in the market with Biden becoming president-elect. Of course, Trump is going to fight that in court, but at least we have a bit more certainty. But the main thing is that, investors are pinning a lot of hope on this vaccine and of quick recovery and for people to get vaccines ASAP. And so that's why I think that NAT is up, right? Is because the tanker markets are expected to recover as soon as oil demand recovers, because then oil tankers will be in more demand because they'll have to ship more oil because there's going to be more demand for oil, right? So there's definitely a positive association between oil demand and oil price and, of course, the tanker market, right? And so that's why I think, just because of the promise of vaccine, that's why tankers, not only NAT, are up. Okay, if we're looking at from Potent and Partners, we're looking at the spot rates for Suezmax and VLCC carriers. We see, again, they're still pretty damn depressed, right? 1400 on Monday for Suezmax carrier and 6,900 for a VLCC carrier, which carries double the amount of oil. So it can't be because of the largely increased spot rates, because that's not true. However, if we look here on the right, oil jumps on vaccine hopes and OPEC supply signals, right? So just because of this hope for vaccine, all oil is also going up, right? Not only the oil tanker market, but also oil in general, right? If we're looking at Tuesday, no better. It's like 1900, which again is not even close to break even for Suezmax vessels. Okay, and I mean, it's just oil gaining, kind of like headlines like this. Just because of vaccine hopes, investors kind of price into the market the future demands and future outlook. So right now they're pricing in that a vaccine is going to be coming to the market in the next coming months. But one thing I have to caution investors is that it will actually take quite a bit of time to mass produce and distribute this vaccine, right? So there might be some lull in the market after that. Even though the vaccine is effective, it'll take a long time to actually reach everyone and to get herd immunity, right? And of course, we know that NAT is supposed to get out their third quarter results on November the 16th. And in my previous video, I actually showed that they actually might have some promising Q3 results, just because for their TC earnings, time charter equivalents, some tankers or some companies actually book their ships for weeks or months in advance, and so they actually earn more than the spot rates. They earn what was the spot rate at the time that they booked that time charter equivalent for however many months or however long the voyage is, right? And I can link that up here somewhere to my previous video showing that actually a previous tanker company reported some good Q3 results. So NAT might actually deliver on this promise. Hertzborg Hansen, the CEO here, said that NAT is solidly on its way upwards. So again, one person commented, yeah, pretty ballsy for him to comment that. But again, we'll have to see on November the 16th, which of course you can be sure that I'll be doing. Okay, anyways, I just want to go over two main things here, okay? And one is, of course, again, the future of oil. And then the next is the positive outlook for the coming months and even year, okay? So here are 4 scenarios for oil if we look onto this chart here, okay? First one, business as usual. Oil demand will recover in 2020s to exceed 2019 level, but peaks around 2030, okay? And we're going to read here in this article all about that. Number 2 is a step scenario where pandemic is brought under control in 2021, resulting in a quick economic revival and energy demand recovering to 2019 levels by 2023. Of course, these two scenarios are good for the oil tanker market in the long run because it shows that oil demand will recover by 2023, especially as population grows. SDS case is the more environmental case where surge in investments in clean energy tech over the coming decade ensues, which will lead to a decline in the oil tanker market. But again, this is over the next coming decade, right? And we can already see this with new startups sprouting up everywhere, right? You know, we see Neo, we see Tesla, which is definitely isn't a startup yet, but you guys understand what I mean, right? You know, Canadian Solar, all these solar energy companies, all these electric vehicle companies, Workhorse, right? Helion, of which I own some shares of Helion. So this continues, and there's a surge. And again, if it looks like Biden will actually become president, he's the president-elect right now. This looks like with his $2 trillion environmental initiative, this looks like this may be the case, of course, but it will still take, you know, over a decade to actually reduce this peak oil, right, and oil demand. And then the reference case is that oil remains the dominant fuel until 2045, which of course still may be the case even if there's a huge environment surge in green tech investments, just because it's going to take years and years to phase out all of what we were pretty much brought up on, which is fossil fuels, right? You look at fertilizer, you look at, of course, what powers our whole industrial system, right? It's oil, you know, plastics, they're made of oil, okay? And the good news from the second article that we'll talk about is that, you know, there's a lack of new building tanker orders, right? And around 25% of the world's approximately 800 VLCCs, which are the largest carriers, which carry 2 million barrels of crude, are over 15 years old. And, you know, the average scrapping age is like around 20 to 25 years, right? And there's a lack of new building tanker orders, which means that of course, tanker market is going to go up because there's less tankers on the market, right? Just based off of supply and demand. Okay, so let's go here and read a little bit more in depth on these scenarios. Okay, so British Petroleum presents business as usual, where policies and tech continues to evolve in line with the recent past. Oil demand will recover in 2020s to exceed 2019, but peaks around 2030 and declines slowly thereafter, right? So again, if it peaks around 2030 and then declines, of course, there's going to be many opportunities to get out of NET when it rebounds, okay? The International Energy Agency presents 2 main scenarios, the STEPS and then the Sustainable Development Scenario. So STEPS is based on current policies and assumes that the pandemic is brought under control by 2021, quick economic revival, and energy demand recovering to 2019 levels by 2023. Okay, the second one is, of course, the net zero case that assumes significant additional shifts in societal behavior, so just higher acceptance of lower carbon energy tech and distribution. And of course, this will take a long time to build out, right? So even if this is the case, which it looks like it is slowly leaning towards this, it's going to take a long time to implement, a long time to process this, and to actually phase out oil. So I do believe that, again, there will still be a time if you're an NAT investor to get out of the stock and make a nice profit, okay? And then OPEC presents a reference case where oil remains the dominant fuel until 2045, right? And then Potent Partners, which is, of course, where I get these lovely updates from. They point out that while such outlooks are not really relevant for the day-to-day charter market, which are like the spot rates, the day-to-day prices of how much it costs to rent out a Suezmax tanker or whatever, new building tonnage order today will eventually operate in the markets described in those situations, right? So what they're saying is that demand and supply of oil tankers will match whatever scenario happens in the future, okay? And so And in all three scenarios, the world is expected to address environmental risk more seriously, resulting in global oil demand declining by about a third or more by 2040. Okay, 2040, that's like, 19, 20 years from now, right? So we still have a lot of time. Okay. So yeah, I'm just saying, there's no need to worry yet. And of course, with the stock price increasing, that's obviously a good sign. It might just be an aberration of this whole landscape that we're in, this huge uncertainty and this whole, value stocks gaining momentum. But anyways, the second one is, of course, the lack of new building orders. So the lack of tanker new building orders, coupled with reduced freight and asset values over the past few months, are the current developments that would lead to a more positive market in 2021 and beyond. And of course, that is also what I believe, right? And let's look into this a little bit more. So the decline in order book across the board tanker shipping segments are mainly due to uncertainties over future oil demand, tanker earnings, and requirements of engine designs in view of regulations, according to Vice President Commercial and Operations of Barry Oil. Okay, so there's also a lack of financing, as many traditional shipping banks have reduced their lending or withdrawn themselves altogether. Right. However, the lack of new buildings today will lead to a bullish market for tankers in the coming years. Right. Again, just based off of that supply and demand. Of course, new buildings take about 2 years to actually, when they're contracted out, to actually be delivered to the shipyards and to be used and to operate in the spot market. Right. So it takes a long time for these tankers to be built, and it takes a lot of investment. Okay. And he added that scrapping, though, will need to happen, especially for the aging fleet, right? And here we talk about that 25% of the world's approximately 800 VLCCs are over 15 years old, and they can only command low rates, right? And if tanker rates remain depressed, all of the aging ships will need to exit the market. Only then we will see a slower recovery, but much better tanker demand supply by 2023. Okay, that's his projection, right? We believe there may be a gradual recovery during the fourth quarter of 2020 and Q1 2021, though the recovery will be less pronounced than usual, right? And they say that there's going to be an increase in ton miles, just because the West sourcing more oil from the East, as Western refineries are facing pressures from low margins and high inventories due to pandemic measures, and there's new refinery capacity coming up from the Middle East and Asia. Crude trades will travel a greater distance, translating to more ton mileage, right? So it's going to be a gradual recovery. That's what they're saying. But yeah, pretty much what we can look out for is, of course, NAT-Q3 earnings on November 16th, which I'll be covering, and also this nice increase in the tanker NAT price, which of course comes as a surprise to all NAT investors. But yeah, I hope you did enjoy this video. If you did, please be sure to give it a thumbs up and subscribe if you haven't already. And I hope you guys have a fantastic day.